Ladies and gentlemen, boys and girls, it is once again that time. You're watching episode 14 of Engine Room, a podcast by Token Metrics, where we cover crypto markets, financial technology, everything inside and outside of crypto. We've got an esteemed team of deep crypto nerds to cover all of it for us. Let's say hello to Bill, our chief technical analyst.
Hi, Dylan. Thanks for having me.
Absolutely. And we've got Forrest, our senior cryptocurrency analyst.
Hey, welcome to the Engine Room, everyone.
And Jacob, market analysis intern. I always get it wrong, Jacob. Market
analyst intern, correct?
Market analyst intern. Goodness gracious. Anyway, guys, one of the things that I noticed big time yesterday was that Cardano popped pretty well. I own a play amount of Cardano just so I have some awareness of what it's doing. I don't care if it goes to zero, and it's never going to make me rich. It's just enough so that I have some kind of finger on the pulse. And this thing soared yesterday. I don't really know why, but I bet we have some theories. What do you guys think?
Well, I think we have Cardano has smart contracts launching within the next 30 days or so, which has been a highly awaited and eagerly awaited catalyst event. And with the rest of the crypto market doing so well right now, I think people are taking this as an opportunity to load up on Cardano, thinking that it may explode even more once they launch smart contracts.
Right, because it never really participated in the recovery rally the way, say, ETH did. So in some ways, it's a catch-up trade. In some ways, the BitBoy army may be moving out because he's got a lot of people and a lot of Cardano followers. Mm-hmm. So, you know, when that gets going and people get enthusiastic about it, you know, it's just got a lot of fans, so it can smoke higher, especially since DeFi looks like it's really moving as well.
The main thing I know about Cardano is that it's got a really good team behind it. Charles Hoskinson is a co-founder of Ethereum, although he kind of doesn't want to be called that anymore. He wants to be known as the Cardano founder instead of the Ethereum co-founder. But my only point here is that this seems like a really solid project that's not going away anytime soon.
Yeah, I'm a huge supporter of Cardano. About 10% of my portfolio is staked on their Yoroi wallet. What I like about Cardano is their method of targeting developing countries rather than developed countries like the United States. Here, they can give access to countries that don't have as developed infrastructure like the United States. So they're working in Ethiopia right now to give 5 million students, 750,000 teachers, a decentralized identity system that will track their grades and their progress through school. And then they can use that once they graduate to use it for banking, use it for healthcare. So I think that targeting a untapped market is a great idea. And it's also great for the world because it's providing infrastructure to people who don't have it.
Yeah. Anything else to say about Cardano, or should we change subjects to Richard Bailey? I have a lot to say about Richard Bailey.
Yeah, no, man, let it rip on him.
Well, if you're not aware, Richard Bailey is a senator from Alabama. He's been in office for about 34 years. He's 87 years old. He's retiring at the end of his current term, so he's out of office next year after what will be 35 years as a senator. And this one person was all it took to totally tank the US having a regulated crypto industry. So there's been a lot of talk about this huge infrastructure bill that was supposedly going to collect, it was going to change the way crypto was taxed and then put that new tax money into improving all kinds of infrastructure throughout the US. We're talking about roads, we're talking about internet infrastructure, we're talking about replacing old lead pipes. The bill easily exceeds $1 trillion. But good old Senator Bailey decided that if he couldn't get a $50 billion budget increase for defense spending, never mind the fact that the US already spent more than $700 billion on defense last year, if this senator couldn't get this little increase in the defense budget, he was going to be the lone voice that tanked the entire crypto regs. And that's exactly what he did. So as a young crypto loving idealist, I'm a little teed off about it, to be perfectly honest, because here's a guy who, I mean, I don't want to sound ageist, guys. He's not going to be around long enough to see this stuff actually take hold. So it feels like he's crashing a party that he wasn't even invited to, if that makes any sense. He was 75 years old.
Having a guy of his generation tank crypto is unconscionable.
Yeah, I mean, he was 75 years old when Bitcoin was invented, yet he's throwing around political weight to stop it. It doesn't seem like he should be able to do that, yet that's exactly what he's done.
It seems like he's just going out like guns blazing. He's like, this is my last year. I'm just going to do whatever I want. Because it's not like he's trying to get reelected because he's retiring. So he's right. Whatever, if I don't get what I want, no one else gets what they want.
There's a certain irony to it as well, because it's like, oh, you're not going to let me have my war money? Well, then you're going to be stuck with the same kind of gray area regulations that, legal, but not legal without being fully legal, but not illegal either. Crypto still doesn't have clear regulatory designation in the US. We came really close, but we couldn't get this good old boy $50 billion for bombs. So now we don't. Where do we go from here? What happens next?
Well, I mean, not to get political, and I mean, I think most people would agree, maybe I'm wrong, but I think most people would be in favor of some variation or some sort of term limits to keep people from being in office for 34 years at the age of nearly 90 years old. I mean, I feel like that's a fairly safe position to say on a public podcast like this without getting too political. But this has been an issue of debate for years and years and years, term limits, right? So I don't expect anything to change, but that's maybe the solution that would work.
Yeah, Forrest, it seems like you're kind of echoing a tweet from your old wrestling buddy, Mike Novogratz. I'm sure you know what I'm talking about.
Yeah, actually, I saw that tweet, and his comparison was it's not ageist, but I mean, the military has a limit. I think it's 66 years old. You can no longer serve in the military, which I mean, makes sense at some level. You don't want somebody that is not of able body and able mind in leading our military forces. And the same goes for, I think, the political spectrum at some level. I mean, that might be a hot take, but I think there's something there worth discussing and worth fleshing out, right? Maybe it's not arbitrarily 66 years old. Maybe it's just a certain term limit or, some sort of a guideline or regulation on how long these people can be in office.
I'll take it one step further, sometimes as an analyst, you've got to sound like a conspiracy theorist, even though you're not. I just find it really strange that in a $3 trillion bill and with a guy as connected as this, that he didn't get what he wanted wrapped into the original bill. Okay. Mm-hmm. And he comes out of left field at the absolute last minute. And then this is a guy that won't have to face any ramifications because he's retiring. And meanwhile, everyone's blaming it on his age. And I'm kind of wondering, gee, an 87-year-old guy woke up and said, hey, let's blow up crypto. No, I'm sort of wondering who was behind that in a strange way. And ironically, crypto is taking one look at it as of now and is like, it looks like contrived BS to me. Let's take the market up. So, you guys can take your conspiracy to kill crypto and, sit and spin.
Stick it where the sun don't shine. Yeah,
that's right.
Yeah, when I was reading up on this, I saw that, I don't know if this is factual, but that his biggest donors were from big banks. So that could be one reasoning behind him stopping crypto is he's getting money from big banks to stop crypto.
Yeah, he got the phone calls were made.
Yeah.
Just like Janet Yellen getting paid millions of dollars by banks to talk on Zoom. I mean, oh my God.
So I remember when it was very early in the Biden administration, And some news had come out about Janet Yellen taking some preposterous speaking fee. If memory serves, she got 80 grand for speaking about 20 minutes. And I think that's just the tip of the iceberg. I think we have quite
it's into millions.
I think Janet Yellen might have some skeletons in her closet, and the nature of things being what they are, they're going to come out. So I'll be following that for sure. I think I might set up a little Google alert for Janet Yellen to see what's what.
Yeah, supposedly, if you're going to do that, find out if she's still taking the money as Treasury Secretary. Still doing it's the gig economy at the highest level.
Yeah, turtles all the way down, right? Everybody's a driver on some level.
God almighty.
Anyway, let's talk a little bit more about how governments around the world can actually benefit from this stuff. Of course, I'm talking about central bank digital currencies, the good old CBDCs. There's a number of pilot programs in countries around the world where they are actually putting out national cryptocurrencies. The Bahamas, Sweden, France, Japan, and many others over the past couple of years have come out with their own national cryptocurrencies in kind of a test drive phase. And I know Jacob has some details on some of the newest countries. Jacob, what are some of the newest countries throwing their hat into the CBDC ring?
Yeah, so just on the news today, well, yesterday it was Bank of Jamaica, and today it's Bank of Ghana and Bank of Thailand. And there's actually a really cool website. You can go to atlanticcouncil.org/CBDC tracker, and they are tracking 83 countries. 5 are launched, 14 are in pilot programs, and 16 are in development. So it's cool to track that along. And I think one great thing about CBDCs is that, specifically in Ghana, and I'm sure in other countries, is that the CBDCs are able to facilitate payments without a bank account, contract, or smartphone. And I was just recently explaining crypto to one of my friends, and he said, well, one major flaw with crypto is you need a smartphone to use it. And many people around the world don't have smartphones. And so I had one response was, well, to get a bank account, you don't just need a smartphone. You need to have a credit check. You need to have background. You may need documents from your national documents. So it's a lot harder to get a bank account with a big bank than it is to get crypto. But even if you don't have a smartphone, with CBDCs, you don't need one. So this provides access to cash currency all around the world to many developing countries that don't have it. So it really much democratizes currency and access to currency and payments.
Right. It allows these countries to not only bank the unbanked, but if the pandemic gets worse, it also sets up a mechanism for UBI, which is what Jack from Twitter is into, universal basic income, right? In other words, how do you keep everybody from sinking into the ocean without giving people money that they're going to blow on partying? Well, you give them a central bank digital currency that can only be used to pay for certain things.
Right. Like a high-tech version of food stamps, basically.
Right. That you can also use for Uber, diapers, and whatever. Right. So, central bank digital currencies banks the unbanked and then sets up UBI to help fellow man. And it also gives governments the ability to control crypto on-ramping because, we are trashing, we're not saying nice things about Congress and regulators today, but governments do need to stop money laundering and people who are bad from using crypto because that benefits all of us by keeping the market clean.
Yeah, it's an interesting little problem. How do you improve money? I think we're headed the right direction. Now it's a battle of hearts and minds at this point, is what it seems like. I think the technology has proven itself, but now the onus is on the collective subconscious to catch up. Is that too esoteric?
No, it's not. I mean, if I'm following you, there's nothing like attacking crypto as a component of a $3.5 trillion sugar bill to bring crypto to the limelight, say we've arrived, and bring it from the unconscious mind into the conscious mind.
Yeah.
Crypto's been promoted, even if they do a little bit of damage, which is why my screen is full of green, frankly, much to my surprise.
Yeah. Well, what else can we attribute the general? It seems like, Bill, how long ago was it? It was maybe 2 or 3 weeks ago where Bitcoin was scraping 30K and it was just kind of a bloody red scene all over the place.
Right.
Is there any single thing we can attribute this comeback to, or is it many things?
Well, I think the comeback started when big players were moving chess pieces around, the Grayscale ETF, the Coinbase IPO, without going into war and peace, created artificial pressure on the market. So now Bitcoin is normalizing for its scarcity value. Ethereum has all kinds of catalysts coming up, and the market was like artificially depressed. And people looked at the artificially depressed market and got depressed. They got bearish. They looked at it and the sky was falling, and it wasn't. So at 29K, everyone hated it. At 46K, everyone loves it. I'd be happy if they went on continuing to love it. The infrastructure bill is still out there, so I'm telling people not to FOMO, but it is funny how crypto Twitter was like, I don't know, binge eating peanut butter at 29K and is drinking champagne at 46K. But crypto in the green will take it.
Yeah.
I mean, I wouldn't mind so much if people kind of switched for a little bit to hating crypto, because then it'll give some more buying opportunities for us.
Right. A lot of people waited for the dip here and didn't get it. That doesn't mean it still won't happen, but political risk is a technical analyst nightmare. It really is.
Yeah, too many variables to account for, right? You can't see into a senator's heart and mind by looking at a chart. Anyway.
Right, especially when you have senators dropping bombs like the Shelby thing ran shivers down my spine, just because, nothing like stuff like that to blow up a perfectly good chart read, wah, sorry.
Well, what else can we cover here, guys? I'm seeing stuff that I'm reading something that suggests that the market is coming back because retail investors are back. Like the idea here is that the institutions have had their day in the sun, and now it's back to the small guys, you and me, to kind of help carry the weight of the market. Does that track with you guys?
A little bit, but I think one of the bigger aspects that hasn't been mentioned yet of why the market is coming back is there's a lot of that artificial suppression that Bill was talking about. A lot of that had to do with China banning Bitcoin mining and those miners having to migrate to new countries. And that's a process that's a multi-month process that is probably getting close to or coming close to a close, right? If you're picking up your Bitcoin farm, your Bitcoin, mining operation and moving it from China to Mongolia, that's not an overnight process. That's something that takes a long time. And in order to afford that migration, these miners are going to have to sell some of their Bitcoin, right, to cover the costs of migration. Well, they're selling their Bitcoin into this correction, right, just making it worse and worse and worse. But now that they're no longer having to do that, they're getting their mining operations back up and running in different countries on renewable energy. That sell pressure starts to disappear. Not only that, they're probably selling less Bitcoin than they were before because Bitcoin's gone up in price, right? And they're probably wanting to restore their Bitcoin coffers, right? They want to get back up and running and get back up to a comfortable balance of Bitcoin in their portfolios.
Right. And on this subject of the little guy versus the big guy, it is somewhat hysterical that the institutional store of value, gold and silver, even though the puke is probably over, puked hard, right? Like it puked hard. Meanwhile, people were paying 50 ETH for JPEGs of a rock, right? ETH rock. I mean, NFTs became securities and a store of value at the expense of gold. I'm not sure anyone noticed.
We should talk about the NFT rocks because this is craziness to me. Are we all familiar with this? This is, I gather this is something like CryptoKitties, but instead of looking at cute cats, it's literally pictures of rocks. And they're going for a couple $100,000 a pop.
Well, I mean, look at
Yeah,
crypto.
they're not even actual rocks. They're just, it's like a cartoon of a rock.
Yeah,
You know what I'm saying?
yeah, exactly. Go ahead, Forrest.
Which, I mean, in my opinion, is there's no more utility in a crypto punk than a crypto rock, right? The punk is just a 24 by 24 digital, 24 by 24 pixel digital representation of a person, like with different. I mean, yeah, I guess they're kind of cool, but I mean the level of skill that it takes to draw a 24 by 24 pixel representation of a person with, a few different color variations across, 10,000, it's not that difficult. It's not like a Picasso or something that took a great deal of skill. It's just, it's not representative of the artist's skill at all, which is interesting, right? It's no different than generating a pixelated rock and selling it.
Yeah,
Right.
yeah.
So on one hand, it's a sign of excess. On another hand, it's young people creating their own securities. So crypto NFTs is the fuck you within the fuck you, right? It's like, hey, we're going to go create our own thing. Okay. Our own securities, our own store of value on our own, and the sillier, the better. So
yeah. And interestingly with CryptoPunks, what I think happened behaviorally to really push CryptoPunks to the forefront is people started using CryptoPunks as like their Twitter profile picture. And it's
Right.
it's like wearing it's like the digital version of wearing like a Gucci shirt and Yeezy, like a
Right.
super expensive outfit. And
a Charlie Shrem switch to it.
yeah. It's like, well, look at me. I have 40 grand. This is like a $40,000 watch. This is like the Rolex or, Patek Philippe or whatever the other fancy watch brand is of digital, right? You want to be able to show off in real life, but now we've got, people not even being able to go out in public for the last year. How are you going to show off your wealth digitally? Well, you buy a CryptoPunk and you make it your Twitter profile picture.
Yeah, I follow everything up until paying 200 grand for a picture of a rock. Who was the first person to do that? I want to talk to that person, get to the bottom of this. Maybe I'm just slightly too old to get it. I don't know, guys.
Dylan, wait till you hear about what people are paying for digital racehorses.
Oh, I've heard about the racehorses. Yeah. We can let's get into that another time. I wanted to read a little bit of analysis by Christine Kim from CoinDesk, and it's about EIP 1559, which has been live for about a week now. So Christine Kim of CoinDesk writes, this code change has been more than 2 years in the making. So far, it appears to be effective at doing two things, including burning ETH and curbing block sizes to an ideal target. It has not been so effective in helping users predict what transaction fees will look like over a few minutes or hours, but it has removed the uncertainty for users trying to price their transactions in the heat of the moment. So I largely understand that to just boil down to EIP 1559 is a day trader's dream come true. For ETH, at least.
Yeah, I mean, I think 1559 is, I don't know, at certain parts of the day, I'm just noticing gas prices can be low. So you're not paying $500 to do a trade unless you're trying to do it at 11 a.m. New York time. This also assumes that something like SHIB, a meme coin on the ETH network, doesn't take off, but it sounds like they're going in the right direction. I mean, I made some moves on the ETH network and paid 1/4 of the gas fees I paid to get into those trades. So,
something positive has happened.
Yeah. I mean, crypto's a funny world. If you paid $20 to do a stock trade on Schwab, you'd be like, oh my God, this is ripoff.
Yeah,
you do $25 to do a trade on ETH. You're like, oh my God, thank God.
Yeah, I'll have to dig it up later, but I remember a website that lets you plug in an Ethereum wallet address and it will return to you the total gas fees paid over the lifetime of that wallet. So if you ever want to feel any pain, just plug in your plug in your ETH wallet address to figure out how much money you don't have that you could have had.
I'm not going to do that.
I'm not doing
not
that.
gonna
Yeah,
do
yeah,
that.
yeah,
Yeah.
yeah. 1 inch says if you stake their token, the more you stake, they'll give you back the gas that you spent on their side. I don't want to know.
Yeah.
I don't want to know.
Oh, very good, very good. What else do we have here?
I'd like to talk about the recent hack of $600 million on the
please.
Poly network.
Please, yeah.
I was reading headlines yesterday and I'm like, oh, wow, another hack. But this is the biggest hack of a DeFi network, $600 million. But what's super interesting now is that the hacker wants to return the stolen funds. So at 4 a.m. UTC on Wednesday, they sent a transaction to themselves saying, quote, ready to return the fund. Then a subsequent message, they said, failed to contact the Poly network. I need a secured multi-sig wallet from you. Then Poly network responded with 3 different wallet addresses. And they already started, they returned $1 million in USDC and $2.65 million worth of Shiba Inu and Fi, which is crazy. So it seems like they weren't hacking for their own monetary gain. The news are calling them a white hat hacker. So they were just trying to expose the security flaws.
I'm not buying it,
DeFi.
Jacob. I'm not buying it. White hat hackers don't steal money. They send emails and say, here's how I would steal your money. I think whoever did this started feeling some pressure. I wish I could remember the details. Guys, it's kind of amazing how much information I process in a day. So I'm sorry that I can't remember these fine details. I remember a story from yesterday saying that there was some technical hiccup that it could reveal identifying information about who the hacker was. I think this guy got scared and thinks he can fix it. So this is a 611 million, if I remember correctly. And he's returned 3 million so far. That's not a white hat hacker. That's a guy who got caught and is backing out.
Yeah, that's true. I mean, we'll see if he's a white hat hacker once he returns all of it. Because right now it's less than 1% of it is returned. So he could be like, oh, wow, I'm making the news. I'm returning it. I give 3 million back, but I still get to keep $608 million. So yeah, I agree with you.
I don't know, man. Yeah, it's.
I think Dylan's right about people getting scared. I mean, I read a book. I used to work for a guy who got caught in some insider trading thing and got woken up at 4 a.m. and had the Bureau or the FBI or federal agents kick in his door, have guys with guns pouring into the house and cuff him. And, no matter how much TV you watch, or how jaded you think you are, or how tough you think you are, when guys with guns cuff you and they're standing in your house and they don't give a shit what you have to say, or whether you think you're innocent, or how cutesy you were trying to be with your white hat hack or whatever. Yeah. Okay, yeah. When guys with guns may show up, yeah, money starts going back because it's scary, right? Those guys don't play around.
Well, what else can we cover here? I've got some analysis from Wolfie Zhao of The Block on how China's crackdown has shaken up the Bitcoin mining pool market share. Does anybody have any thoughts or opinions on this? She writes, Bitcoin network's hash rate has stabilized and is starting to grow again now that it has been 2 months since China began shutting down local Bitcoin mining farms. China's policy maneuvers have disrupted not only the nation's dominance over the global Bitcoin hash rate, but they have also significantly reshuffled the market share of the world's biggest mining pools. So it sounds like, am I interpreting this correctly? China has just totally willingly given up its first place position when it comes to mining Bitcoin because the government is afraid of something. I'm not totally clear on this.
Yeah,
The government's afraid. Good.
I was going to say, I think it's more China trying to have more control in the form of maybe a CBDC. But I mean, there's no telling how much Bitcoin the Chinese government actually owns. Maybe it could be a situation where the Chinese government doesn't want its people owning a decentralized currency and giving that power to its people. However, I mean, China itself, the CCP may own a lot of Bitcoin.
Yeah, and if I want to put on a little tinfoil hat, there's a part of me that says the government doesn't want the people mining Bitcoin. The government wants itself to mine Bitcoin, and the people can have, whatever digital, what is it, the yuan in China, if memory serves.
Right.
They can have this CBDC yuan that the government has total control over. They don't. Yeah, I don't know. It's just very interesting to me that China would, at least publicly. The public story is we're no longer the world leader for Bitcoin mining. We give that up, is kind of what they did by outlawing Bitcoin mining.
Right, but they're attacking all things internet over there. Don't forget, for whatever reason, I don't know. It looks like a communist party panic. They may be losing control over power because of the virus. So, I mean, they're going after Tencent, Baidu. No one knows where Jack Ma is.
That's crazy. We still don't know where Jack Ma is. We don't know where one of the richest Chinese people in the world is, and it's been many weeks at this point.
Right, and there's months, and they're still attacking. Novogratz tweeted. He summed it up really good. Z's making a mistake. They're attacking the internet over there. I mean, those stocks, their FANG stocks, were at one point, were crashing and crashed their home market. So I think it's. Again, it's all a part of the miraculous FU that's happening. They tried to derail Bitcoin by taking out the miners, and guess what? Okay, yeah, Bitcoin went to 20K, but so what? I mean, it's another day in crypto. Oh, yeah, it went down 50%. Oh, yeah, whatever. And it's back, right? And then it's all going to go wind farm, and if they don't tax them out of the United States, it'll still recover. Even if they do, it still looks okay. So who knew the Bitcoin network could take that kind of punch, which is why I'm on the market update going, well, you have to be a little cautious, but don't underestimate what Bitcoin can do on the upside. Because if they can punch it like that and it comes back $20,000, what happens when it gets going?
Am I wrong to be sensing a parallel between China's actions today and the Soviet Union of many decades ago, where it was just all about control over the citizens? I'm being a little reductive here, but the Soviet Union was all about, you don't get to leave unless we tell you can leave. You don't get to read any books unless we tell you can read these books. I wonder how the Soviet Union would have handled cryptocurrency. I guess we can look at some Russian cues, but the Soviet Union story did not end very well. So that's why it's very interesting to me that China would be kind of cracking down in the same way. I'm not even talking about communism. I'm just talking about a government deciding that it gets to decide what its people can and can't do. I don't think that's going to end very well. And
it's a sign of panic. They're panicking about something, right? There's a guy I just started following on Twitter who wrote a book that, it's all over for China. I'm sorry, I don't have the details in front of me, but 1 minute you're like a quasi-capitalist country rolling in money. The next minute you're trying to shut down the internet.
Yeah.
It can't speak well for your position of power and the health of your government or your system.
I had shared with Jacob on an earlier podcast kind of my hippy dippy fantasy about what is the subtext of cryptocurrency technology? What is this stuff actually bringing about in the world? And my little sunshine daydream is it's bringing about a world where countries are kind of imaginary. This idea of one country say, well, we only take a certain kind of money here. I think, is it too ridiculous to say we're slowly going towards a post-state society? Maybe I've read too much science fiction, but that seems to be the subtext of this stuff. We want to transact with who we want to transact with, and anybody wants to come in the middle of it, get the F out of the way. We don't need you.
Yeah, well, I mean, that's a huge use case for crypto is cross-border remittances in a decentralized manner. It's a use case. I mean, and it's one of the larger use cases in crypto, right? Ripple is kind of XRP is kind of built off of that. Stellar is built off of that. Nano is becoming a popular way to send money across borders. People have been using Bitcoin for quite a while to send money across borders, and being able to transact without those middlemen, without PayPal or whoever taking a really bad fee in the middle and giving you a bad exchange rate. So I think that's a huge use case where crypto is allowing money to be sent fast, efficiently to anyone you want, wherever you want, right? Bitcoin can get from the US, from somebody in the US's wallet to somebody in Russia or Africa's wallet in a matter of 10 minutes, right? Now, do I like some cryptocurrencies that can do it faster than that? Yes. But the idea behind this is that you can just send money. Imagine trying to send money right now to somebody in Africa, like dollars, and then exchange it for their currency, and the amount of fees that you're going to have to pay and how long it's going to take. It doesn't even compare to being able to just send Bitcoin or send Nano or send Bitcoin Cash or Dash or any digital cash solution.
Yeah.
Yeah. I mean, I want a t-shirt that says keep crypto hippy dippy. I mean, there's no need to have a music festival anymore and listen to Jimi Hendrix and smoke a bunch of dope and go home and have nothing change. Now, the hippies are running the world because they can push the crypto button, and all of a sudden they're competing with the dollar payment system, the SWIFT system, and the Fed like that. So, more power to the hippie dippies. You better start listening to them and taking them seriously, just like the guys who are paying for the rocks. Yeah, I mean that may be silly dippy, but it doesn't matter. These people are making a footprint, right? And the little guy has got more power now than ever. Which is why out there for the plug, stay with Token Metrics, stay with this podcast, stay with us.
Yeah,
go ahead,
Bill. On that notion, I just, when it comes to these regulators, I don't think they know who they're dealing with yet, right? This is a young generation that has a very high risk profile and a longer investment time horizon than the regulators, right? These are 20-year-olds that don't mind going broke because chances are they're already broke, right? These are people that don't mind YOLOing their 20K life savings into crypto or into an NFT or into, like, regulators don't know the type of people they're dealing with right now. And I don't think they know how to handle it, because these are people that will just, they don't mind going broke. They don't mind taking a huge, massive risk. The idea of matching their 401k and throwing $5,000 a year into a Roth IRA doesn't even register with them. The idea of saving for retirement for 60 years and waiting for their Social Security check that they're probably never going to get, and just getting crushed by inflation over the next, their entire career, it doesn't sound very appetizing, right? These are people that they've been put in a situation where they'd rather throw 20K into their life savings into crypto than bet on the existence of Social Security by the time they retire. And I think regulators are kind of in a pickle right now, trying to understand the situation these people are in and why they're willing to take these risks.
These senators, good luck clearing their voicemail. I couldn't leave voicemail with either one.
Oh, wow.
So it's allowed. It's not only a crowd that, has more staying power, but, it's a lot louder of a crowd than they anticipated.
Yeah, guys, I think we've just kind of come full circle here about on this note about regulators being out of touch with younger people, because it's like exactly what Forrest said: different risk profile, different appetite for investing in different kinds of assets. It's interesting to watch this kind of friction build up. I'll be very excited to see how it all releases, as it must eventually. But in any case, are we wrapping this thing up? I think we've got a nice little chunk of content under our arms here, guys. You've been watching or listening to Engine Room, a podcast by Token Metrics. Every Wednesday, we put a video up on YouTube, and you can see our shiny, happy faces, talk crypto and everything else. I've been Dylan Love. I've been joined by Bill, Jacob, and Forrest. We see you 3 days a week, and that means the next time we'll see you is Friday. Thank you for listening, and we'll see you the next time.